Hi, I'm G. Rajkumar Nair. Silicon Valley Bank, the signature bank of US based in California, was closed down on Sunday, 12th of March 23 by the US regulator. Started its operations in 1983. Its deposit size is about 16 lakhs crores, equal to our PNB, Canara, Bank of Baroda, etc., though ranked 16 in US. Many Indian startups are having deposit with them. Deposit insurance cover is only up to US dollar 2.5 lakhs, which is approximately 2 crores Indian rupees. More than 90% of the depositors are above this cutoff, it is learned. Federal Deposit Insurance Corporation is acting as the receiver and will start giving covered deposit from 13th onwards so quickly. In the meanwhile, Federal Deposit Insurance Agency says it expects to pay in the ratio of 60.14 percentage to all depositors, that is, without any loss to the exchequer taxpayers. Let us understand what is SVB, the Silicon Valley Bank, reason for its failure, and its impact on Indian banks. SVB is not an ordinary commercial bank like Bank of America or JP Morgan Bank. Their main operations are startup funding, including major names at very high rates. Its higher deposit rates attracted many startups to put their excess funds as deposit. These excess funds of SPV was invested in mortgage-backed securities, which is a bond popular in the West with an unlike normal corporate bonds found in India, these mortgage-backed securities or bonds are bundling together of various similar underlying securities like mortgage of house properties with similar maturity or with a mix of risk are sold. Purchasers invest in these bonds according to their risk appetite. The higher the risk, the higher can be the return. Bonds has a fixed coupon and price can move according to the market demand. Now let us look into the reasons for the failure. One, Fed rate hike resulting into fall in MBS portfolio value, leading to sale of other securities. Its bank's share value tumbling to 60%. Two, relaxation in capital requirements. Avoidance of periodical stress tests for small banks having assets up to 20 lakhs crores permitted in 2018. Four, oversight questions on regulator and the credit rating agencies. As part of the inflation control, which went up to historical level of 8.5% post-COVID, US Fed Reserve has increased its lending rate to 4.75% from 2.16% in 2019, that is more than double over the last 6 7 months in several steps. The theory is that if the market interest rate moves above the level of a particular bond coupon, that is interest rate, bond value will come down and vice versa. That means it will be sold or purchased at discount or premium. Resultantly, the value of MBS in its portfolio came down drastically. SVB had to sell off its other assets, had to utilize its capital to meet the gap. Share value tumbled down to 60%. This information led to heavy withdrawal of deposits, leading to a run. Donald Trump has reduced the capital requirements and periodical stress tests for small banks, resulted into weakness not getting noticed. Rating agencies overlooked new developments of huge selling of assets in December 2022 and share value coming down. These are all the reasons. Now, what is the impact? Many startups are affected to meet their immediate liquidity requirements like salary pay and all that. including some startup in India. It is reported that 90% of the depositors will not get covered because insurance cover is only up to 2.5 lakh US dollar. Uncovered depositors have to wait till the receiver disposes of the taken over assets to get a share of the receivables. To contain contagion effect, Federal Reserve, the US Central Bank, introduced a new emergency liquidity facility to other similarly exposed banks by way of pledge of their treasury securities at book value through a new bank term funding program. This is to avoid distress sale of assets, to protect from contagion effect, and to give confidence in the banking system. Indian banks are not affected as their relationship with the commercial banks like Bank of America, JP Morgan, etc. Because SVB is an investment bank. Because of that reason, there will not be any impact for the Indian banks as SVB is not a commercial bank. In India, all scheduled banks from SBI to small private sector banks are having the same capital norms, unlike US, who reduce the capital base for small banks like SBI. Moreover, Indian banks are not having any investment in these mortgage-backed securities as it is not prevalent or popular in India. It is astonishing that 5 days before the collapse, SVB celebrated the Forbes magazine's Best Bank of the US award continuously for 5 years. This is done after booking a mark-to-market loss of US $15 billion in December 22, that is 1,229 crore. Hindenburg is being trolled now. Thank you.